The year 2020 was an unprecedented year for Nigeria as the COVID-19 pandemic took a toll on the nation's already battered economy, leading it into its worst recession in 5 years. Just as the oil market collapse wiped out export earnings and 50% of government revenue, with the current inflationary pressure, a drop in external reserves and other challenges bedeviling the Nigerian economy amid the second wave of COVID-19, there are expectations that there will be a significant improvement in the economy in the year 2021. However, a review of current burning economic issues shows that the Naira stayed at 400 Naira to a dollar, a resistant level. That's at the I and E window, while appreciating at $478 per barrel at the parallel market. While gross external reserves falls below $36 billion, to $35.93 billion, as Brent was also down to $61.14 per barrel on profit taking and speculations of a possible rollout on output quotes. Gold is up fourth consecutive day, amounting to about 1,845,000 that's announced, and on a weaker USD as investors anticipate a prolonged rally in global commodities prices. Now, to give an in-depth analysis of these burning issues and other economic issues facing within the Nigerian economy, I already have in the studio Mr. Folari Dedeji. They are both from Afri Invest Asset Management Limited. Thank you very much for your time. It's great to have you on the show.
Yeah, thank you very much.
I really appreciate your time. Like I rolled out in the introduction with all of those figures. First, let's do an overview of our economy. We know we've seen a lot, COVID-19 and what's played out. What's your take? Do you really see 2021 as that year where we'll get out of the woods?
Well, looking into the figures, we expect that the GDP for Nigeria is supposed to grow at about 2.1% this year. And looking at the recovery in oil prices, we can see oil has stayed at $61 per barrel. We also see a recovery in and a better distribution of COVID-19 vaccines across the world. We can see that the US is doing about approximately 3 million jabs a day. And we can also see that Europe too is also recovering. So with these drivers, we expect that on the back of more trade, global trade, we expect global trade to also increase by 8%, and that will drive the Nigerian economy. And it's sad to also see that oil is here to save us again.
You know,
yeah,
again, because you know when it crossed the $60 benchmark, I was like saying, wow, all producing countries are going to really smile now, particularly at this time when we have a budget that we really need to service.
Yes.
A lot of deficits. That's another worrisome thing. How does that come to you?
Yes, and that's another case that we should worry about. The DMO came out with the expectation for debt levels. They are projecting a 40% to GDP ratio of debt, and that means that they'll be issuing a lot of more bonds this year. However, we also expect the DMO to take advantage of the lower yields in the environment. So the next bond auction should be at should be February 17, and we should see lower yields yielding debts. In addition to that, we also expect that the DMO will come to the Eurobond market and issue more dollar-denominated debt.
That's a good one. Let's look at the inflation rate, which has escalated in recent times. We are standing at about 15.75% at the moment, and the analysts are expecting it to rise about 16%, even for the month of January.
Oh, yes.
Now, how do you see this affecting the economy first? Then later, let's look at the capital market and maybe even the money markets.
Yes. So on the short run, we expect inflation to edge closer to about 16.5%. That's coming into this month. And that's as a result of insecurity that we have in the Middle Belt area and the north. And in addition to that, we also have some infrastructure deficits, the movement of this of goods across the country. In addition to that, there are also pressures around the food inflation. Food inflation is currently at the rate of 19.76%, and that means that for the common Nigerian, you are going to be left with less disposable income.
Let's also remember that as Nigerians, talking about disposable income now, we are grappling with hike in electricity tariff.
Yes.
I'm having that problem even at the moment now.
Yes.
With the disco that I run, but I'm still going to keep that on. You know, there are issues also with deregulation.
Yes.
which would also, you know, dovetail to increase in fuel price.
Yes.
With all of this and income not increasing, I don't think Nigerians are really in for a good time as we move on in 2021.
Yeah, it's going to be a challenging year, and part of what investors and part of what we've been clamoring for has come down to the fact that we expect electricity prices to be cost reflective, and that will also drive in more investment in that space. Now the government has decided to let that happen, and the cost of electricity will definitely go up. It will affect every one of us because we'll be paying more out of our pocket. In addition to that, we also expect the petroleum prices, that's PMS price, to actually inch higher because we now run a more open market pricing regime.
COVID-19 and the effect on our economy, something that we cannot shift away from. How did our response, talking about stimulus packages, the central bank came up with the for MSMEs through NISA. Aside that, we also saw efforts from even the fiscal side. But how would you compare it? I don't want to say we should compare with other countries. Let's look at what they've done so far. How well would you say that has helped to cushion the effect of the negatives, the lockdowns, and all of this trying to cope with the new normal?
Yes. Generally speaking, the CBN has actually tried to support the federal government.
Indeed.
And in many ways, and we can see that in the ways and means in which CBN has supported the government. So as for the COVID response, we expect more pressure on the government on the fiscal side of things because a lot more people are not doing businesses like they used to, and that would actually lower tax revenue. So in general speaking, 2021 is going to be a very difficult year for the Nigerian government.
It's really very difficult. Let's take a commercial break and we'll be back and we'll continue this discussion. Stay with us. It's Your Business Nigeria. All right, glad to have you back. You're still watching Business Nigeria. Well, I have my other guest is also in now, Babajide Tolagbe, and Folarin's been here already. Babajide has just joined us. He's also portfolio manager at both from Afri Invest. Now, let me start with you. You're just coming in. We were talking earlier about what's been happening, COVID-19, its effect on the economy, and what we face as we move in 2021. I think a lot of optimism. People believe that 2021 will be better than 2020. What do you make of that? Let's start that way.
Looking at how things have played out in 2020, and we all know how sentiment was in 2020. But looking ahead, I believe that in 2021, we expect that to see economic improvement across all regions. You know, looking globally, things are getting stable globally. You can see the IMF and the World Bank all projecting positive numbers for 2021. And we know that's on the back of vaccine production, improvement in the commodities market, and, you know, improved business confidence. So generally, we expect business confidence to improve in 2021. And for Nigeria, you know, the story is not actually different for us because we also expect that, given the low, given the fact that we were in a recession in 2020, and that was on the back of, you know, economic lockdown, and, you know, the disturbance in external positions. Yeah. So, you know, given all those low base and the fact that we've come out of these lockdowns, and that both the fiscal and monetary authorities have supported in terms of fiscal and monetary stimulus, all of these factors put together, an improvement in external conditions. Take, for example, oil prices. We can see that oil prices are currently at pre-pandemic levels, and, you know, improvement in all other sectors. So given all of these factors, we expect that in 2021, the recovery is going to be actually much more better. But however, the scale of recovery is still what we are not certain about.
Now, let me ask Folarin about food inflation, yes, which is also currently above 19%. Yes. That's as of December 2020. Now, how can this be brought down in the short to medium term, considering even all of these insecurity issues that we have now? Farmers can't even go to the farm in some places. Yeah.
So this one of the easiest solution and lower hanging fruit for the Nigerian government is to work on security. Once security is taken care of, we expect to see a lower trend in food inflation. And it's quite sad to see that when you look at the figures at between the middle belts, that's from Benue down to Gi, you see these are the states that are currently experiencing high food inflation.
Yes.
And the quality, or if you look at the quality of people that live around this area, these are rural developing areas. So we expect that if the federal government can actually tackle security, we'll see this trend downwards in this year.
Now, Abajide, what would you say about, you wanted to say something in regards to food?
Yeah.
Food is very important. Everybody wants to know what's happening with food, so go ahead.
So in addition to what Florian said, aside from security, I also feel that the government needs to, answer some infrastructure questions, because looking at, in terms of transportation, looking at transportation of goods from the upper belt lower to where, the consumption is here at South, it's quite difficult for what's called for food producers. So that's one of the issues that also transportation is also one of the issues that the government needs to look into. And also to mention the fact that this cattle, the Fulani herdsmen crisis, these are factors that are, affecting agricultural producers at that space. So, all of these factors, policies that are going to be put in place to actually sort out security issues, improvements in transportation sector, and all other sectors that that are also within this value chain. Those are all the questions that needed to be answered by the government for which us start having good numbers, inflation numbers.
I want to follow you up with the last MPC meeting.
Yeah.
We saw what happened. A lot of projections, people were, before the meeting. But at the end of the day, the committee retained all rates, all unchanged. And many said that was what the CBN could do, that there was nothing for the Monetary Policy Committee to do. Any shift would have maybe an adverse effect on the economy. Yeah. Do you agree with that too?
I think it's a sound decision, because looking at it globally, global central banks are also keeping rate constant. Take, for example, the United States Fed Reserve. They kept rate constant at their subsequent meetings, and they also stated that going forward, rates will be kept at bay. But however, the Fed also hinted that in order for us to see a normalization in rates going forward, some economic parameters needed to be, to be tweaked. Take, for example, inflation numbers. If we see inflation propping up, rates will also respond. So for Nigeria, I think it's a good play. It's a good play by the CBN government, by CBN governor. Yes. And for those who think that rates should have been increased, I think that's not quite smart, because we are just starting 2021. We expect that we're about to recover from the pandemic we had in 2020, yes. And obviously it is very, very clear that the economy needs some sort of stabilization, and this rate stabilization is one of those factors I believe that would allow us, get the type of recovery we expect in 2021.
Let me throw this to Fulani, because we already talked earlier about the budget. Many said, apart from the fact that the budget was timely, also coming with the finance bill was another positive. Yes. Do you also agree with that? Oh. And what are really, let's highlight some further positives of this finance bill.
Yes, for the finance bill and the budget, it's quite innovative for the government to actually do that this time. Looking backwards now that the effect of the pandemic has affected our economy. So the finance bill actually provides some cushion, especially for small, medium businesses who will no longer be paying tax. That's federal tax to the government. That is very good. And that would further increase disposable income at that level, and then also see more of these small, medium businesses employ more people, therefore impacting on unemployment rate positively. So I think if you look at the overall outlook of the finance bill, it's quite good. Yeah,
so it's a good one.
It's a good one.
Yeah. So we should be, because the problem is revenue now, yes. Because many are talking about the revenue shortfall, which is important to bridge at this time. Babajide, you know this is very important, because we cannot run the spending plan if we cannot fund it.
Yeah,
the deficit seems to be on the high side.
I agree with you. And if you look at Nigeria's fiscal position over the years, it has been actually, let me use the word terrible, because if you look at our budget and our actual revenue, there's always a very, very, very far, a very far difference. And actually, it's always usually lower than what we actually budgeted. And now in 2020, the COVID-19 pandemic just exposed that situation. And and when you have a revenue shortfall, especially given the fact that most of our revenue comes from oil, when we have revenue shortfall, government cannot take care of other capital projects. And you find out that most of the money coming in terms of revenue keeps going to settling debt services, while the current expenditure also takes a huge chunk long. So at the end of the day, you notice that what's left for capital expenditure is quite minute. And then when we have that kind of little numbers for capital expenditure, how do we expect to see the required growth that we want to see as a country? And also, I also want to speak on the fact that at this age and time, we are still kind of dependent on oil. We've been echoing it over and over again that our country needs to improve our revenue sources. We need to look at diversifying our revenue sources and giving, take for example, at this time and period whereby the world is globally shifting into what's called clean energy, and we are still quite heavily dependent on oil for revenue inflow. So that speaks about the medium. That's more of like a medium-term risk for Nigeria in terms of revenue generation.
Yes. Yeah, I want to ask you. When Trump left office, former President Trump, everyone was looking at President Biden coming in and looking at improving our relationship with the United States. Now, do you see any difference? Talking about policies, do you expect, look at the WTO, the US was quick enough to, support Nigeria and our candidate, Dr. Ngozi Okonjo-Iweala. What do you think about our relationship with America as we move on, particularly as it impacts on
Yes, for our relationship with the U.S., we expect a smoother, a smoother relationship with the U.S. And in addition to that, we expect more bilateral agreements with them, if that's possible. But we also need to understand that 10, 15 years ago, the U.S. used to be one of the biggest buyers of our crude oil, and that no longer happens because the U.S. is now a major producer of crude oil. So our relationship needs to shift. There's a lot of synergy going on around the technology space, where you see U.S. companies like the Stripes of this world buying over a local company here in Nigeria called Paystack. So if you look at these trends, you can see shifting from the normal oil and gas transactions to more technology-driven transactions, and those are the areas that we should put at the forefront of engaging the U.S. And I think it will be better for us because technology will provide a base for us to employ more people leaving school and reducing our unemployment rates down here. And furthermore, that will further even increase the tax receipt of the government.
That's more money. And we need money, serious money at this time. A follow-up to that, I talked about WTO when I was asking that question, talking about Dr. Ngozi Okonjo-Iweala and what that holds for Nigeria. Many say that's a good one for Africa. And that now takes me also to the AFCFTA, which is also an implementation, on the table. So now, putting all of this together, what are the positives for Nigeria? Are we really competitive to take advantage of all of the goodies in this market?
Looking at Nigeria's trade position with Africa over the years, the numbers are quite low because we hardly trade with African countries. Most of our trades are usually from Europe, the likes of the Netherlands and the likes. But with this new development after and the fact that we have our representative at the WTO, that simply signals that it presents an opportunity for Nigeria majorly to increase our export earnings. Most of our export earnings are usually from developed countries, and the fact that we no longer have trade barriers within these countries, Nigerian producers can now scale up in terms of production and also export to this country, to these neighboring countries. Take, for example, we saw what Dangote is doing in neighboring countries, in the likes of Ghana and Togo and Benin. So if we continue to see more local producers, and interestingly, we can even see small, medium-scale businesses which can also expand their earnings. It means that it makes them more competitive, and it increase their revenue, and in turn also increases what's it called, tax for the government. So generally, I think there are so many opportunities that are inherent in their after development.
And you see us taking advantage of all of these goodies in the AFCFTA. I was even going to ask you about maybe small businesses taking advantage of this. Many talked about the information technology sector that we have a lot we are doing in that space that we could sell to the African continent. Do you agree?
Yes, I definitely agree. When you look at the space of technology, for example, you realize that Lagos, a state like Lagos attracts a lot of investment from the outside world. The other cities that you also look at is Nairobi, and then you look at South Africa, Cape Town. So I think for us on that technology, in the technological sector, we have a lot of advantage, and we can provide more services to our African brothers and sisters. In addition to that, I also see small, medium-scale businesses taking up consulting, rendering financial advisory services, and a lot of other services to our neighboring countries. On the whole, after is a net positive for Nigeria, if we can take advantage of it right now. And in addition to that, to what my colleague had said, if you look at the infrastructure stock, the deficit stock that we have today is huge. And so I see no reason why the CBN or the DMO shouldn't be taking advantage of the debt market, local debt markets, and issuing out debt at record low rates that we are currently in. They should take advantage of that, raise those debts in order to finance infrastructure spending. And with that, Nigeria can actually compete with the African countries.
Are you one of those that will support that we take more debt, or are you one of those that will say we need to channel those debts to productive ends? What do you make of debt? Because many are complaining about the country being indebted.
Yeah, so our debt position as a country is worrisome. But however, I believe that if we're going to take more debt at this period, we should take more of local debt, because looking at the yield environment, yields are quite low, yields are at low level, and it makes business sense for the government to actually tap into that opportunity and finance projects. However, on the other end, after taking the debt, what do you use these funds to do? So when you have debt, I believe that this debt should be put to productive areas. Take, for example, I believe that in 2021 going forward, there are some sectors that requires a lot of attention. Take, for example, the health sector. Given the COVID-19, brought about the weaknesses in that sector, we saw how exposed we are as a country. Money gathered from debt should be used to develop that sector further. Also, education is key, because during the lockdown, it looks like there was no education in the country. Everybody was just at home, and in some developed countries in the world, they were advancing their education during that period. So these are critical sectors that that could also drive our economic numbers going forward.
The Nigerian economy, one way or the other, the mainstay still remains oil and gas. And practically, we are more of a gas country. We are not just taking advantage of this. It takes me to the petroleum industry bill. That document. Yesterday, I had a whole session on the PIB. And many believe that this is just the document that will unlock that sector, that will open up that sector for the needed investments. Do you also think along that line? Why would you think we've had this delay? I don't know. For me, I believe it's just interest.
Yes, it's sad that we have the delay in execution of the PIB bill. Nigeria is at a critical point where we need to be taking advantage of our oil and gas stock, meaning we should be bringing in capital investment to get this oil out of the ground, wherever they are, be it at the deep sea level, and ensuring that we immediately sell this product to the world. Because in the next 30 to 50 years, oil and gas investment will dry up, and then we are looking at the Western world, where there's a push for solar-driven cars and all sorts. So it's critical for us to push for this capital investment almost immediately, get the PIB signed, and so we can earn more tax receipts from this investment.
And take advantage.
Take
more, yes, from that sector. You want to say something about PIB? It's really key at this time. I like your comment on it.
Just to add to what Florian said, because he said something which is quite funny. The oil is there, just lying where it is, but all we need now is capital and, in terms to extract this oil. But for Nigeria as a country, one of the major risk factors that investors are actually being wary about is the regulatory risk, because, you want to do your business in Nigeria, aside from looking at the economic factors, looking at the demand factors, supply factors, you should also be very, very, conversant with what's happening on the regulatory end. Yes. So all these policies, if they are put in place, and all things are sorted out, it's very, very easy for investors to bring in capital and also extract these particular resources. If you look at our neighboring countries like Ghana and what's called Benin Republic, these countries are smaller than Nigeria in terms of their economic size and other factors, but they are attracting capital, they are attracting FDIs into critical sectors of their economy. But however, Nigeria is still quite we are seeing a moderation in FDI, and that's because of the sentiments in the political space. Investors are not willing to take that risk, and that's one of the factors that are driving, giving us problem basically.
Almost finally, let's talk about Forex market. we must touch on the Forex market. We've seen what's happened at a particular time, I think a few years back, where we're almost getting to 500 Naira mark. Well, the central bank was able to manage the situation by pumping in some money, some dollars into the market, and also for the Bureau de change operators, all angles, all aspects of the market to at least address this ugly trend. But now, some have brought up this argument that can the CBN sustain this? You know, talking about to keep defending the Naira. Do you agree that we should just allow market forces to take charge and we see where we find ourselves?
Yes, on one hand, a lot of people are clamoring for market-driven rates, while on the other hand, we have other people saying CBN needs to actually manage our currency. And what we currently have today is sort of a managed float, where the CBN actually comes into the INE window and stabilizes things there. It's quite a pity, it's quite sad that we now have several different rates in different markets. There's a differentiation, there's a spread, meaning for the same assets, it's trading at different prices in different markets, and it's quite sad. So what the CBN need to do is to actually focus on export-driven policies that will further increase the flow of tax of dollar into the economy. And if we can focus on those export-driven policies, for example, sorting out the ports and ensuring that we drill it down to businesses around that's the local business, about taking advantage of exporting more goods, and that's the only way we can actually earn more dollar receipts and stabilize our exchange rate.
That Forex market is very important to me, addressing this disparity that exists in that market. How long do you see us addressing that? It's an ugly trend.
So I think if that question is going to be answered by higher authorities, because if you do what you have to do, if the government does what they have to do, I believe that we won't be in this situation any longer. When Folari spoke about increasing our export earnings, take for example, look at the like of India as a country. India is exporting human capital, and that's more of like a very good source of revenue for the government. And if Nigeria can also tap into the opportunity, that would also help our fiscal positions, and also improve our reserves, our foreign reserves, rather than just depending on oil that it's not a function of what happened domestically. It's basically driven by what happens in either the Middle East or whatever is happening between US and China. Because you can't leave your fate to what's happening externally. You need to take charge of your position, of your local position, and see how you can diversify your your export earnings, so you have less concentration on oil. Aside from human capital, like I mentioned earlier, I think agriculture is another space that Nigeria can also do good numbers in terms of exports. Because looking at our GDP composition, you can see that agriculture accounts for the hugest chunk of our GDP. So there are much more opportunities in that space if we can dig deeper, monetize the value chain and drive out these goods I believe it will help our foreign exchange problem, and over the time 3-5 years we'll have improvement in that space.
That's a very good one. Now, almost finally, let's now talk about a lot of optimism, like I said earlier. But with what is on ground, and we move on in 2021, do you see the fiscal side and the monetary side doing more? Because many are still saying that synergy needs to be better than what we have. Some are saying the monetary side is doing more than the fiscal side. The fiscal side should complement the monetary side. Because when that happens, SMEs will thrive, small businesses, big businesses will thrive. Because I'm telling it to small businesses at this time. They are really, really struggling to stay alive. What do you think about them moving on in 2021?
Going into 2021, well, we still expect more from the monetary side, and that's the truth. As a result of the CBN supporting the federal government.
It's not the best time to be a CBN governor in Nigeria. I must tell you.
Very correct. And as a result of that, we are going to see a lot more pressure on the CBN end. And if you notice, if you go to the CBN website today, you will see all sorts of interventional funds that are being created by the CBN. Some people believe that the CBN is doing a lot, while other people believe that CBN is on track. Well, for us, and our opinion is that the CBN should actually take part of this these interventional funds and hand them to developmental agencies to take over them.
Yeah.
So CBN can focus on its core responsibility of price stability and thereby impacting the lives of Nigerians, that is from the local up, and that's one of the solutions that we are preferring today.
And then what are you preferring? What are your advices? That's almost, we're rounding up now. What do you think? What should be done? The medium, short to medium, and to long term? Because I don't think we have any quick fixes at the moment.
So I think for the short term, I think the government should look at improving revenue sources, like I mentioned earlier, and also on the expenditure part. I think looking at our expenditure numbers, we have high debt. We have high recurrent expenditure. The cost of governance is very, very, very high. And if government can look at reducing that in terms of all those operational costs of the government, also if we can see some sort of moderation in our debt servicing costs, that would also leave cash for us to push growth in critical sectors of the economy, like of which I mentioned earlier, education, ICT, a very critical one, agriculture, and the human capital space. So I think if we can free up some funds from in our budget, we can also drive growth through those channels I mentioned earlier.
Parting shot from you.
We believe that in 2021, the economy will probably grow by, let's say, an average of 2.1%. We see a recovery.
Looks ambitious to me.
Oh, well, yes. We see a recovery, and in terms of the pandemic, we see a more downward size risk to the pandemic with the vaccine being produced, and hopefully from there, before the end of H2 2021, we should start seeing more. We should start doing more trade with the outside world. Yes, that's what we believe. I
really appreciate the time for Larry Adedeji. I know you're a portfolio manager at AfriInvest Asset Management Limited. I'm Babajide Atolagbe, who's an investment risk analyst, right? Thank you guys very much for your time, and I hope we'll call you again. You join us either live or virtually on the show. No problem. Thank you so very much. Thank you. I appreciate it. Enjoy your weekend.
And you too.
Let's take a break. And of course, when we return, the discussion continues. It's Your Business Nigeria.